Okay, all right. Well, let's welcome Bino, the head of research at Elara Securities, who joins us on the show. Hi, Bino. Good morning. Good to see you. When, geopolitical tensions continue, hopefully we hear about some de-escalation. Since you heard the chat that Mangalam had with the HUL management, what's your view on the stock? One of the biggest underperformers in the last 5 years. But we have seen this in the past, and once it gets going, it could very well, catch up in no time. However, this time the triggers are missing. Your take on the stock?
So for last few years, people have been waiting to see some spurt of growth coming from the HUL company and their portfolio. We have seen a significant consumer spend pickup in select categories, especially more on the discretionary side, in select retail, in airlines, hotels, even on automobiles, etc. But the traditional FMCG, which people refer to when they talk about consumption, is yet to show a significant jump in growth. Part of this could be, like the CEO explained, the wallet share has moved away from traditional FMCG to new age brands, new ways of spending, new life experiences, etc. So HUL rightly is now trying to refocus their energy, their brands, etc., to address a new category of the population. And hopefully that revives some growth for the company. We have seen the multiples come down over the last few years. I do not see significant multiple derating from these levels, but upside would depend upon how they execute their new strategy and get those new brands and new vibrants into their products.
Bino, hi, morning, and thanks for joining in. I was just seeing the Elara note on IT released yesterday, where you'll argue that after a 20% correction seen in the stock prices of IT companies in the last 1 year, the valuations are now compelling and you are constructive on the sector. So what are you recommending to buy, and what could be the extent of gains? Is this going to be a tactical bounce because growth is going to be limited? Maybe we see a valuation pickup because the pendulum has swung too much on one side, but meaningful returns could be difficult in the absence of good growth?
So any discussion on the IT is right now a discussion on how the artificial intelligence scenario will play out globally. There are differing views on the same among people. Our view is that artificial intelligence does not mean the end of IT industry. We believe that there will be a lot of new services that come up that can be tapped into by the Indian IT companies to create a new wave of growth. But there is an interim period which we are going through right now, where the traditional IT services are not growing, and at the same time, the new AI-related opportunities are yet to take off in a meaningful way. So this interim period of pain, we have already seen it over the last 1 or 2 years. Possibly, we could also see it for another maybe 2 quarters, 6 quarters, maybe even 12 quarters. Very difficult to put a pinpoint number there. But at the same time, there is definitely an era of growth that is coming beyond that. How to time this is the key question that comes to mind when one thinks of investing in Indian IT as of today. But now, given the huge correction in stock prices over the last 2-3 months in the wake of this AI-related disruption, we believe that a lot of this, if not completely, a lot of this is already priced into the stocks. And hence, at least from a near-term perspective, we expect a rebound. If the rebound is sharp, then possibly some of that may again get priced in. But beyond this interim period of disruption, we do look forward to an AI-led leg of growth for the Indian IT companies.
And in that context, have you all analyzed Fractal Analytics? Does Elara have coverage? And if yes, what have you made of the Q3 numbers?
Sorry, we do not have a coverage on that.
All right.
All right. So that's the word. What do you make of the oil and gas space right now? There is a fair amount of disruption, but now there has been a 30-day reprieve that has come in. Do you think that's enough to, settle matters for now, and maybe the decline in these stocks stops?
So from the direct impact of higher oil prices perspective, the new deal that has been reached, not exactly a deal, but the reprieve that US has given to import oil from Russia does help. So that will contain the country's oil costs for the time being, which should help some of these stocks recover. The directly hit stocks like oil marketing companies, airlines, etc. Some of them should recover with this move coming in. But having said, it is still an evolving scenario. We need to see how the war pans out, how long it goes, whether the Strait of Hormuz remain closed materially for a significant duration, etc. All these will impact the price of oil. And if the price of oil stays high, even the oil imported from Russia is unlikely to be materially cheaper. So all these put together, the risk is still hanging over the head. It is still not completely mitigated, but definitely this waiver is a good step for the time being. But you also need to understand that the impact of high oil prices goes much beyond the oil and gas sector. Freight costs have gone up. Other commodity prices typically tend to go up in line with oil. All these can impact other sectors as well. So if this war continues for some time and lingers on, then we could see a commodity price-led margin compression across many sectors, not just oil and gas. So we need to wait and watch for events to play out in the Middle East.
But Bino Pathiparampil still with us. In the pharmaceutical space, the big talking point right now is the semaglutide opportunity. Do you think there is a play in India because of that, or maybe everything is discovered and the opportunity has been sized up and in the price right now?
Semaglutide opportunity opens up in various markets globally starting this month. India is one of them, probably some other big markets like Turkey, Brazil, etc., and possibly Canada as well. Indian companies have a play in almost all of these markets, and it's going to be a very big opportunity. Taking India specifically, our internal estimate is that this could be $1 billion market over the next 4 years. That is a significantly large opportunity, which we have not seen any single subspecialty in the Indian market earlier. To that extent, it can possibly take up the growth rates of the Indian pharmaceutical market as well. All of these, I don't think, are completely priced into the stocks. Some of the stocks which are front runners to gain from the semaglutide opportunity leaves still some upside on the table in our view.
All right, we take that point. Bino, thanks a lot for that. In fact, just as we speak, as a note for our viewers, on Monday at 3 p.m., we have the semaglutide town hall sizing up the weight loss drug markets, the impact that it could have not only on the pharmaceutical space, but could there be a second order impact or not? The Ozempic trade, could that impact your portfolio or not? And that's the kind of lineup that we have of people who will be speaking on that show. So Monday, 3 p.m. onwards is where you can catch that. Thank you so much, Bino, for joining in and giving us your views on a whole host of stocks and sectors.